What's up, everybody? It's been a while since I've done a video, so I just wanted to do a quick one based upon what's going on in the economy because I'm getting busy and I want to make sure one of my last videos, if this ends up being my last video, is at least getting you prepared for what's to come. What may come sooner than I think, I don't know. Hopefully it doesn't come till next year or the year after, but I think we're going to get a crash. But I don't think that that's going to be a bad thing for the United States. I'm a Trump supporter, and there's a reason I'm a Trump supporter because of the understanding of economics that I have. Doesn't mean I'm right, but it just, based upon my understanding of economics, I believe that President Trump is doing some really good things for our economy. And the people who want a communist global world where they can get their buddies up on the top and then they can control everybody by making every country the same so that there's no place for you to escape their control, have been destroying the economy and linking everybody so that not just the United States economy, but all the world's economies have been linked into a global system. And so back in 2008, when one fell, they all fell because it was all systemic, right? What happens to one happens to all. President Trump has been changing that because the people have realized that there's a problem with that. Christine Lagarde, the head of the IMF, the International Monetary Fund, basically has cautioned people about being too nationalistic and trying to separate from globalism. Don't be self-reliant. Don't rely on yourself. Rely on us. Let the government do everything for you. Let the global governance do everything for you. And I've done other videos about that in the past, about how governance is a way for people to be controlled without having anyone to blame at the top. If you get mad about the way they're controlling you, you can't yell at anyone because there's no government. It's governance. It's governing by a system, not governing by people or representatives. And so, when people get mad, where are you going to get mad at? Right? It's a whole bunch of agencies. It's a way for the government people to protect themselves. So anyway, I used to think that we were going to have a lot of problems with hyperinflation first. So I felt that I would always try to protect my value of my money by investing in certain things like precious metals and things like that, which I still do. I do want to protect the value of my money. But 2008 taught me a valuable lesson. It taught me a lesson that we don't live in a world where money is actually money. It's now based on debt. So usually when you create money, you do it by what I'm doing right now. I work at a job. I'm on my break right now, so I'm going to try to take 15 minutes to do this video. But I work at a job to generate income. By my doing labor, I generate some kind of a monetary increase from the service that I provide, and I get compensated for that at the rate that my employer is willing to pay me for doing that production. Okay, so money is created by my working. We don't live in that kind of a society anymore. We live in a society where now, if I want money, I don't have to work for it. I can borrow it from somebody else. And so by borrowing from somebody else, I can have what I want now without doing any work now. I can do work later to pay for it if I want to. So the world has reversed. Things have become pretty much topsy-turvy, right? What's white is black and what's black is white, as the scriptures say. In the end times, what's good is bad good will be bad and bad will be good, and what's white will be black and what's black will be white. It will be all topsy-turvy. So we're living in those times where, instead of working to create value, working now so that you can get your money to be able to buy things later, you can get your money now and then work later to pay back the money that you borrowed. Which is fine, if you know how to manage your finances, but most people are getting greedy and they want to do it now. And the government has controlled interest rates in order to grow this globalist economy, to have people borrow money and finance infrastructure that normally wouldn't go on. Because when you work now to make money a little bit later, so you can buy the things you want later, you're more wise with the way you manage that money. When you can get money now and it's easy and you just have to struggle to work later to pay it off, you tend to be a little bit more frivolous about how you spend your money and in the decisions you make in doing things. So interest rates are a very interesting way to control people's minds. Typically, when you have high interest rates, central banks control that, right? When you have high interest rates, what do people do? Well, a bank is borrowing money. So an interest rate is basically the cost of borrowing money, okay? So when the central banks raise interest rates and make them high, they're compensating the people who lend money to borrowers, right? Because they can get a higher payment for the money that they're lending. Because there's an opportunity cost in money, and we see it as time value, right? If I have money in my pocket and I want to spend it now, I can do that. But if I lend that money to you, there's now an opportunity cost. I can no longer spend that money. I'm giving it to you so that you can do what you need to do with it. But now I need to be compensated for the lack of ability to use my money now. So there's a time value that's added onto the money, and we charge that in the form of an interest rate, okay? So let's say 7% per month I'll charge you. So that if you borrow $100 from me, you're going to pay me back $7 every month until you pay back that $100, right? Unless you pay your balance back in full, and I don't have a prepayment penalty and other penalties for you doing so. So anytime you're just borrowing the money and for an extended period of time and you're not paying back in full, for each month I'm charging you 7%, okay? So that's the time value of money. That's the cost of it. So anyone who lends money and they're high interest rates, you're going to make a lot of money. So let's think about this. Who lends money the most? Banks, okay? So if you're a bank and a central bank has set the interest rates at a high level, what are people more likely to do? They're more likely to put money in a bank, right? In other words, they're going to lend money to a bank at a higher interest rate so that when they put their money in a bank account, the bank will pay them interest for having your money in a bank account, right? Compounded. So people are more likely to save. When you earn something, you're going to go put money in the bank, right? Because you'll actually make more money with a high interest rate. And then what do the banks do? Of course, the banks don't just pay you. They have to go make money too. So they take a portion of what you've deposited and they lend it out also, because they can also make a high interest rate for lending the money out. And they just jack it up a little bit more because they are paying you some. They need to make a profit, so whoever is borrowing from them has to pay a little bit more in interest for when they borrow. So borrowing from the bank is not going to be as much, right? Because if you're a borrower and you're looking to get some money from a bank and you have to pay a high interest rate, you're not going to borrow as much. So savings tends to be higher when you have higher interest rates. And therefore, growth of an economy tends to be more measured, more controlled, more rational, more reasonable, because people are using their own money to fund any project that they decide to do. And if the risk of doing a project does not yield a higher return than the bank, than just keeping their money in the bank, they're just going to keep their money in the bank. So there's an incentive for people to save when interest rates are high. They can make more money. When interest rates are low, the bank will not pay you as much for putting your money in the bank. So you're, as a saver, you're not going to want to save as much, right? You can use your money somewhere else. So you're more likely to spend it or invest it somewhere else. And also, you can borrow from the bank at a much lower interest rate when interest rates are low. So the cost of borrowing money is less. You're more likely to get it, all right? And there's no more opportunity cost. So the reverse again. You have borrowing is easier, earning is harder. I choose to borrow when interest rates are low. So that's what the government's done for all this time. They have interest rates so low, they've subsidized building this global economy so that we have one world government, one world governance, and everybody has to abide by that, right? And so people got sucked into just borrowing money. It's easier to get money now than it is to get it later, and it becomes like a drug, and they got addicted to it. 2008 changed everything to me because there became a liquidity crisis, right? If it's easier for you to borrow, you're less likely to work. You start to develop a mentality of like, hey, I can get money easier just by taking it from somebody else. Why do I have to work so hard to, and I'll just pay it back in installments. I don't have to pay it back in full. And then even if I don't want to, I can probably just walk away from borrowing. So a lot of that borrowing went into the housing markets. It goes into student loans, goes into car loans, goes into things that don't really earn money. Very few people actually use it to earn money. And like as the bank does, they borrow, instead of borrowing and then lending it out some other way to get higher interest rate return, they just borrow and then they end up going to work and paying it back and paying it back. So meanwhile, that borrowing is compounding against you. And so you start to get in what's known as a liquidity crisis, because eventually when things get more and more risky, interest rates have to rise, because the cost of borrowing money is not just a time value element. It also has factored into it the risk involved. So part of the time value element is, if the longer you borrow money without paying it back, the more risky you tend to be. And so the interest rate is probably going to be higher for you to borrow money, because they have to be compensated, because there's that risk that you're not going to be able to pay it back. And so they want to make sure that while you are making payments, you're going to pay more of it back up front. So they factor that into the interest rate as well. And so we got into the situation where for a long time interest rates were so low, people were borrowing, they're putting into houses, and then the banks were giving loans to people who didn't deserve it. So we got into this housing crunch. There's a great movie called The Big Short, where eventually people were just buying. Houses were going up in value, and then eventually you just can't borrow enough money anymore, because there's no way that your income can sustain paying it back. So the banks will stop lending to you. You get to be so risky that there's just no way I'm going to be able to charge enough money to be compensated for lending you what I could be spending now. So the banks started to hold back on their loans. And because many of the banks had a lot of borrowers that were risky and weren't paying things back, the banks couldn't lend to each other, and they started to view each other as risky. So you started to get what's known as a liquidity crisis. There's no savings in the banks because the interest rates are low, so nobody wants to put money in the bank. So the banks don't have a liquid reserve, right? They don't have money to shore up any problems that they might encounter. And all the money's lent out, and it may not come back in. So we had that huge banking crisis back in 2008, and they bailed out the banks. Well, taxpayers bailed out the banks, and taxpayers are the same people who are consumers. So if the consumers can't borrow money and buy houses anymore, and they just basically stole money from the tax, they forced taxpayers to pay back the loans that the consumers were buying. And that can be okay if the taxpayers are the same people who borrowed. But in a lot of ways, there are people like me who didn't borrow. I didn't borrow to buy a house. I didn't borrow to buy a car. I didn't borrow to go to the college, So when they steal from taxpayers and they make a taxpayer bailout, they're forcing me to pay for other people's irresponsibility, And so that's where I'm not too fond of this global governance thing. This is why we elected Donald Trump, so that Donald Trump could end this globalism. And he's been doing a phenomenal job of that. So now he's doing these tariffs so that you must trade with us fairly. His Fed secretary, his Fed head, Jerome Powell, has been raising interest rates. So now borrowing money is going to get more expensive, and saving money is going to be more profitable. Minus inflation. So Donald Trump is trying to set it up so that we have a much stronger economy after the crash. And there's a crash coming to everybody. We're starting to see it now. Other countries have borrowed money from the United States, and it's denominated in dollar terms, right? And so as the interest rates go up, it makes it more expensive for them to borrow. So what have they done? They've had to quickly liquidate, get dollars in order to pay back their loans, because the interest rates are getting so high, it's getting too expensive for them to pay it back. And rather than default and destroy their currencies, they raise their interest rates in their countries so that the value of their currency goes up so they can pay back stuff. And it's not working. Their economies are shutting down. and people are still fleeing their currencies. So we're having currency crisis all around the world, and everybody is connected due to globalism. So I want you guys to realize that there's going to be a downturn, because whenever we have interest rates higher, you slow down economic activity, you make it more expensive to borrow. So the dollar is going to strengthen, because the rest of the world having currency crises are looking to the dollar. It's the only form of stability that they can see other than gold that they can get quickly, and they can get it in a liquid manner, and so they're demanding the dollar. Well, when you get the rest of the world demanding dollars, and you get people who need to pay back their loans, and interest rates are high, the demand for dollars goes up. So you're going to see a strengthening of the dollar. And that strengthening of the dollar will be a good thing if we ever need to import anything in the future. But also, we're going to have a little bit of a crash too, because we've also got so much debt out there that as people have borrowed, interest rates are going up, it's going to be harder for them to pay it back. So we're going to have a major slow in economic activity. And again, I don't think that's going to be a permanent thing. I think that Trump has set the groundwork so that when the global economy crashes, the globalists are going to suffer. The self-sufficient ones are going to benefit. Our factories are coming back. The tax incentives for people to build in the United States and produce in the United States have been coming back. The job numbers have been increasing. And there's also a war going on, because the OPEC nations have been able to use oil as a form of interest rate against us, because most of our products are petroleum related. There's not a single thing in your life that is not related to, well, I shouldn't say there's not a single thing, but there's a majority of things in your life. There's not a single day you can go without using a petroleum product in some way. Plastics, rubbers, fuels, oils, those are all byproducts of petroleum. So the OPEC nations in history have been really damaging us by cutting production, raising prices artificially, because the demand doesn't change. You're always going to need gas to get to work. So they hurt us financially by raising the cost of everything in our country. Well, now Donald Trump has declared that we are energy independent. We have for once now produced more oil and natural gas and solar and all these other things that make us independent from the rest of the world. So the rest of the world can do whatever they want. Oil prices can rise, and it will not hurt our economy as badly as it has in the past. Yet we still have a lot of debt that we have to deal with. So as they're raising interest rates, like I said, the banks are controlling the rest of the world. They're hurting the rest of the world, so that they're separating us from that global situation. At the same time, Trump signed the USMCA, which is the United States-Mexico-Canada agreement, which is a new form of NAFTA, where our trade will be a lot more profitable to the United States. Because in the history, when you signed a free trade agreement, there was already a guaranteed loss worked into that contract where your country is screwed. So the United States got screwed. In a lot of ways, our dairy was being overtaxed in Canada, so nobody wanted to buy U.S. dairy. They were end up using Canadian dairies rather than U.S. dairies. So now it's been a little bit more evened out, and more of our products will be sold in Canada and in Mexico, and vice versa, in a way that it's more mutually beneficial. So I really like what Trump's been doing, but like I said, there's going to be a crash coming. So prepare, cash up, because when that crash comes, like I said, the groundwork is good for us to jump off. So once we come down to that groundwork footing, the jump is going to be nice. So you want to have your cash ready so that you can deploy it to buy valuable assets when that thing is ready to go. And who knows when the bottom is. Most likely it'll be when most of the debt is wiped out, but I like to buy as the thing is dropping. I let it drop severely at first, and then I buy in a little bit later. Okay, now this video got a little bit too long. I tried to do it short, but went a little long, and I just wanted to make sure I did a video for you guys so that you know where I'm standing. I think eventually we're going to have inflation again, but I don't see it as a hyperinflation. I see it as the depression is coming first globally, and then little by little they will inject currency into the markets so that we can stimulate some more growth. And the Fed always raises interest rates until something breaks. So it will break. They're going to raise again in December. They already raised in September. So I think they're going to raise again in December. And by then we're going to have our crash, or maybe even by next year we'll have our crash, because it's a strain on people to borrow with higher prices. So it's not financial advice I'm giving you. I'm just telling you what I'm doing. I like to buy when prices are dropping. Most people like to buy when they're rising. Don't be that fool. Don't be that fool. Why would you pay more for a higher price? That's not advice. That's just a question. Why would you buy higher? You'd want to buy lower so you can get more for your buck, right? So let the prices drop before you buy. Start shopping now. Look for what you want. Wait for the price to drop. All right, y'all. It's tough. It's a tough subject. It was hard for me to try to do it short, so unfortunately it's 21 minutes, and hopefully you'll be able to get through it. It was a lot, so I'll try to do more videos so you can see where my perspective is. All right, take care.